Hey, good afternoon, traders. This is Tim Reset bringing you another market analysis for Monday, July 8th, 2013. It's good to be back after the 4th of July holiday weekend. Had a long weekend. Thursday, market holiday. Friday was very light trading. That being said, let's run into or go over rather some of the trading setups from last week on the ES. So if we begin on a daily chart of the ES, I'll clear some of these lines off here and back up a couple of weeks. We had a short setup that held at 1641s that traded down to its target at 1575s. We then broke out, or broke down rather, from that setup and continued lower. Now this extension that I have drawn here back from December's highs, I'm going to remove that for now. So a couple weeks ago, last time we talked, we had traded in the short, traded down to the target, and then proceeded a little bit lower. Now when we kind of trade in the middle of the negative 23 and the negative 61.8, meaning we don't hit the 23 and reverse immediately into the next short, and we don't make it all the way to the negative 61, the next drawing that I like to pull will be a full halfway back. So instead of pulling from the entry at highs to lows and take the next setup, I'll consider this trend to be a little bit dirty, and so I'll look for the larger short in the series, and usually that pull comes from the absolute high or low down here to lows. So that was the next setup that I drew, and in the meantime, as I drew this setup and noticed that the negative 23 was pierced, but we didn't make it all the way to the negative 61.8, I'll zoom out and look for some support, some longer term support, which we had back here at the 1550 level. And this is from April of this year, end of March, early April of this year. And then if we take from December highs, as I mentioned, to highs of last month, May, well, 2 months ago now, May, that brings us, that gives us an extension of 1565s. And what that, this extension really isn't visible or a factor until after it trades, but what it gives us is an upside target of 1742. So now that we have pierced all the way halfway back short, that is, the 61.8 has failed at 1635s, we can confirm our targets of 1742. Along the way, some key factors or key inflection points will be the highs breaking at 1649s. That will be a very key, powerful level where you'll see a lot of short covering happening, because right now, the prior swing high that people have stops over is 1649s. 1650 is a very hard sound number, so once that level breaks, that will be a point where we'll see a lot of short covering. And then 1685 75s, the high on the ES for the year. That, when that breaks, we'll see a lot more short covering and a lot of people also jumping on board and chasing the trend. And all of those factors combined will help bring the market up to 1742s. So it's not always buyers at the 50% that push it to the target. It's also sellers that are covering their positions and buying their positions back, getting stopped out, that can actually facilitate the move or help it move along rather quickly. So earlier in the week, last week on Monday, you notice that the short did trade at 1620s. So if I go to we'll start on the 15-minute chart and we'll kind of take a look at that entry. So Monday, we traded up to the 1620, and we actually traded right to that short. Again, if I go to the daily chart, that's just the 1620 56 all the way halfway back short. Whoops, from highs. There we go. 1619 50s from highs to lows. So if I go back to the 15-minute chart, you can see it traded nice and cleanly. 1619 50s was the hard entry. I like to put an order, a tick in front of that, to sometimes if we just trade 1650s or 1950s exactly, and your order is at 1950s, you won't get filled. So putting it at 1925s ensures that at 50s trade you get filled. Now, when we're at these big daily levels, sometimes it does chop around a little bit. So entering at 1625s could have got you in, and we did start to sell off, but then we did come back up and trade at 1950s once again. If we go down to a tick chart, you can see those entries a little bit clearer. And let's see here. Back up one more day. 1950. So I'm just going to draw the line right there. Okay, so that's our daily short. And you can see the first break on the 512 tick chart that we had. We'll move this to a Hakanashi. The first break of the swing low, we traded at the 50s. If you put your order right at 25s, you were filled, we sold off, and then we proceeded to retest. If you waited for the break, that is the break of the swing low, the first short on the 512 traded at 1850s, and then traded to its target, but then once again rallied back up and retested the entry. We had another entry at the next break on the 512 tick chart was a break of the swing low, highs to lows. That one did not hold, so that one didn't really have any sort of a reaction at the 50. And then finally, towards the middle of the day, third time's the charm, and we had from highs to lows the first 512 tick setup after we broke the swing low, traded, and then we continued to sell off through the afternoon. So the first 512 tick chart after the swing low at about noon, I think, 11:50 it was, traded down to its target and then continued to sell off. We pulled back into the first 15-minute level at 1650s, and that took us into the close, traded down to the target. But then, if I pull back to the 15-minute chart, you can see that the following day we were gravitating up back towards the original entry at 1950. So there really wasn't a whole lot of follow-through in the short, but there was opportunity to get into the trend at a low-risk opportunity, a low-risk entry point, and at least tighten your stop, have the ability to take profits on some of the position, or at least move your stop to break even, because we did have a little bit of follow-through. Later in the week, we proceeded, actually today, after the 4th of July holiday, if I go back to the daily chart, broke the short at 1635s, and like I said, now that we've broken the short, the prior swing high and the absolute high will be the next two factors to take us up into our target of 1742s, 1740 area. So that's now what we're looking at on the ES upside targets. And if for whatever reason we do hold below the high of 1620s, say we roll over here right now and we do not break 1620s, I would be looking for another entry down here at 1565s. And really, that would be a great opportunity. If we do roll over, look for a entry on the 15-minute chart or the 512 tick chart right at 1565s to give us a little double bottom and take us higher. If we move to, actually before we go to the euro, if we just take a look at the S&P, you can see how we were kind of forming a inverted head and shoulders, where we have the left shoulder, the head, and now we could potentially be forming and filling out the right shoulder. So, that's a bullish pattern, and we'd like to see some follow through on the volume as well as we move higher. Right now we've seen some stronger volume on the down move, so taking out that 1620 level on the S&P will be a very key factor, key inflection point. Let's move over and talk about the euro. The euro on the daily chart is quite the mess. We're still sitting in the monthly long, weekly monthly long that we've had down here. Let me get rid of some of these lines, and we'll go through everything in order. So the long setup that we've been holding in at 28.83s has traded now for a third time over a period of about 4 months. The short has failed, and the long has failed. So the daily chart is essentially broken, and we're looking for only buying at this long 28.83s on the larger time frame, or fading the highs up here at 32.68. So we're not looking for any more halfway backs in the middle of the range unless we break lows. Unless we can take out the swing low of 27.51s and break this negative 61.8, then we would look for a short from highs to lows. But in this case, I wouldn't use a limit order because there really hasn't been any identification that the trend is going to have follow-through. But that would be the only instance where I'd look for the next halfway back on the daily chart. If we trade higher and break highs, or trade lower and break lows, because at least if we're breaking highs or lows, that shows a little bit of follow through. And then when we draw up the first halfway back, we have some, let's say we break lows and we draw up halfway back, we'll end up having some resistance above us. Or on the flip side, if we rally off 28.83s and break highs, halfway back would have some support below us. So it's all a matter of confluence between the 50% and finding support, and not getting chopped up when there's not a clear trend that has identified itself. So if we zoom to the 15-minute chart, we can see that 28.83's area, the long that we've been moving down into and sitting in the last couple of days, we had an extension short on Thursday. Well, Thursday was the 4th of July holiday, but the currency markets and the Globex futures did remain open, so not putting a whole lot of stock in that, but it did give us the extension short that held Friday evening, and this morning. And what that gives us then is a failure point, which broke this morning. So the extension short had a failure at the negative 61.8, 28.58. Once that broke, that signals a valid opportunity for a long. So we had some smaller 512 tick and small 15-minute moves intraday today, but I'll be looking for in the overnight session to break this major swing high at 2900s and then draw from lows to highs and look for a long setup close or at 28.83s. So that's how looking at the multiple time frames and kind of taking things into context as we zoom in and out of the smaller and larger time frames. A couple other things to keep an eye on. Gold is forming a little bit of a base pattern here. We gapped down a couple of times over the last few weeks, but now we've started to close the gap and potentially put in a higher low. So if we can come up and break highs at 2250s on the GLD and get some volume behind that, I would look for a potential longer term play in the GLD. It hasn't been on a lot of people's radar as of late, which is one reason why I'm now putting it back on my radar. Alcoa earnings are this afternoon, Monday. Alcoa AA is always kind of the Kickstarter for earnings season, so keep an eye on your swing trading positions or stocks that you're looking to trade in and out of. Make sure there's no earnings announcements coming out. I don't have any new stocks to talk about today because the S&P is kind of right in the middle of its range, so I would look for a break of the prior swing high and a pullback to get into longs, or if we get close to all-time highs, I'd be looking for stocks that are already making highs. So the closer we get to these highs, I'm looking for stocks that are already making new highs to kind of put a little check mark next to them, so when the S&P makes highs and pulls back, I can refer back to those stocks that were already breaking out to new highs before the S&P. And then when the S&P resumes its uptrend, look to get in those stocks because they'll be relatively strong compared to the market. If we flip through the top line figures, they all look pretty much the same. The Dow, NASDAQ, both have not broken that prior swing high that we talked about, and then the Russell has. And the Russell actually has already moved up past its high from earlier in May. So the small caps leading the way higher, and we would look for the tech to follow, and then the S&P and the Dow. Lastly, if we take a look at the VIX, we'll go to a 2-year weekly chart. You can see how we've come back down into those mid-teen levels. If we can break down and stay within the mid to lower teens, that would be confirmation that the uptrend is sustainable. If, however, we start reversing and the market starts to sell off tomorrow and the VIX immediately starts to rally and get back up in here to the mid-20s or into the low 20s, or ends up breaking into the mid-20s, that would be a red flag for continued selling. So keeping an eye on the prior swing high in the S&P and looking for the market to start taking out some of these highs. If we do roll over, we'll look for a double bottom to form and look for an entry long at that support level. So with that, I hope you all have a great week, and we'll talk to you again soon.